Good morning, all the participants. We welcome you to this webinar on impact of COVID-19 on financial statements. Now we are going to play ICAI motto song. So I request all the participants to put their right hand on their heart. Honorable Prime Minister, that we are going to in another lockdown time till 3rd June.
Fenil, I think voice clear, Shah?
Yes, I guess now I'm audible. So
yes, now
friends, as our chairman, Fenil bhai, I'm audible. Hello.
Abhishan bhai, audible is there. Yes, please go ahead.
Okay. So now I request chairman of the Ahmedabad branch to give his opening remark.
Thank you, Bishan bhai. The speaker of today's very important session in the present scenario, our own regional council member from Ahmedabad branch, CA Chintan Patel, the secretary of Ahmedabad branch, CA Fenil Shah. And before I say something on behalf of Ahmedabad branch, again, I would like to wish Chintan bhai, the speaker of the day, a very happy birthday. Chintan bhai, we always on our birthday, always we aim of doing something for us and something also for others. So you are taking the best opportunity of abreasting the members with the latest scenario, that's very relevant topic. So kudos to your efforts that you are taking this lecture on this birthday. Friends, I yesterday also told you that Ahmedabad branch has taken a target of 1 crore to donate to PM Care Fund, going in line with our President Sir's motto of giving 21 crores. Generously request all to contribute to the same. Plus, yesterday you also would have received a mail for research. So as we are working from home, now also we are getting an extended time to work till 3rd May from home. So I would also request that those who are keenly interested in research can take active participation in that. So kindly fill that form so that we can form a small group and we can start the research work. Also, friends, Modi sir also today announced to download the Arogya Setu app. We also are requesting you all, because it provides regular updates, it provides you regarding absolute risk which you are facing, it provides you with the help desk numbers and various other informations by which we and the other people who are in nearby vicinity can remain safe. So we all chartered accountants, being a very responsible citizen, careful citizen, let's be a helping hand to government. And right now the very first step of becoming a helping hand is to get app downloaded in everyone's mobile application. And the last thing, yesterday you all would have received a mail with respect to that now we can electronically sign the audit reports and certificates, and specifying and getting the UDIN is also very important for this. So I would request Chintan bhai that in your discussion kindly also throw light on this particular aspect. So now I would request Bishan bhai to very briefly introduce us. A personality is already known to us, but still we would like to take a pleasure to introduce our own speaker, sir. Bishan bhai, please.
It's give me immense pleasure to introduce today's learned faculty, CA Chintan Patel, our regional council member. And Chintan bhai, once again, happy birthday on this day, on this big day. You are going to celebrate with all of us, and it's a pleasure of all joining this webinar. Chintan bhai is also a chairman of management accounting committee at WIRC. We all know that he is a past chairman of Ahmedabad branch and an expert from Ahmedabad, for which we all can have a proud that a country is recognizing him as an expert on Ind-AS and accounting standards. Chintan bhai, it's our pleasure that you are here. I request now you to deliberate on the topic in this current scenario.
Thank you so much, Chairman CA Fenil Shah and Secretary CA Bishan Shah, for giving me this opportunity. It's always a pleasure to get the opportunity on the birthday. So thank you so much for your wishes, and it's always my pleasure and duty to give my thoughts and on this new area of impact of COVID-19 on financial statements. I must appreciate the way Ahmedabad branch is taking the lead in these lockdown situations by providing the immense number of seminars, a number of different topics every day. So kudos to the chairman, secretary, and the whole team for taking these efforts to ensure that the Ahmedabad branch members and members across region are being benefited by the continuous web series which is going on every day. So this is must for Ahmedabad branch to have these kind of sessions. Now let us look at our main agenda, the topic. The topic is basically the impact of COVID-19 on financial statements. We all are aware that WHO has declared coronavirus as the pandemic in all over the world. More than 150 countries in the world are already affected by this coronavirus. Few weeks back, when we talk about the Narendra Modi, our Prime Minister told that let's have lockdown for 3 weeks. Now again, today he came back and says that up to 3rd May, everybody has to be in lockdown. It also gives a lot of fear and panic across the members and the citizens in India. However, the most important thing today is to really take care of our safety. This is like war which is happening because it is compared with the world war. But in this war, what is needed is that everyone has to be in the home. So as a part of our citizens' duty, what we are required to do is to stay at home only. When we talk about these pandemic situations, the citizens and people are affected, and along with the lockdown, the most important impact, which is right now ignored, is the impact on the industry, impact on the organizations. They have been closed situations since so many weeks and for next few weeks, and don't know that when it can be open again, when it can again face the same situation which they are having 2 months back. What will happen to the supply chain issues and problems which can happen? And the most important worst impact which every organization can have is on the impact on the liquidity. Now in these situations, as a chartered accountant, as an accountant of the company or as an auditor of the particular industry, it is the utmost responsibility on our shoulder to look at our added responsibility in this area. This webinar aims to provide and touch upon the various accounting standards and Indian accounting standards which provides the guidance, and where we need to provide special attention which arises because of these COVID-19 situations. Let us look at first is on presentation of financial statements, Schedule 3 of Companies Act 2013, and also we can refer to Ind AS 1. During these presentations, I'm going to touch upon primarily on both the gaps, which is on accounting standards, and second is on Indian accounting standards. As you understand that for certain sets of companies, Ind AS is applicable, and for other companies, AS is applicable. The disclosure requirement and the standards which are under Ind AS are primarily more detailed. They provide more information, they provide more guidance to act upon these situations compared to accounting standards. So we are going to focus more on the Ind AS, and then we are going to focus also on the various situations under accounting standards. When we talk about the presentation of financial statements, we have learned from the beginning, from childhood, that the going concern is assumed. It's assumptions which has been always there when we prepare our financial statements. Now, this is a situation where, as an auditor of the company or as a management of the company, when we prepare the financial statements, there's a possibility where the going concern assumption may need to be assessed. So what is needed is to reassess and assess the going concern of the entity. If we talk about the accounting standards in the framework and also as a part of assumptions, going concern has been taken the most priority. When we talk about Ind AS 1, Ind AS 1 states that to assess the going concern, the entity need to look at next 12 months from the reporting date. For example, on 31st March 2020 year ended, when I'm preparing my financial statements, I need to look at the possibility of the situation of going concern for next 12 months at least. And then I need to see that whether the going concern assumption is still going on or not. If the going concern assumption is being vitiated, where the company or entity may not be able to be going concern, in such case, the financials need to be prepared on other basis. The standard does not provide you the guidance about how to prepare financials, but it should go by based on liquidity. So as a first primary objective as a management is to look at the going concern assumption assessment. Second very important thing is sources of estimation uncertainty. Under notes and accounts, there's a disclosure requirement under Ind AS which says that we need to disclose specifically the major estimations which are done and in while preparing financial statements. Estimation which include the property, plant, equipment useful life, intangible asset useful life, impairment conditions, the assumptions which were taken, employee benefit valuations. So a lot of estimation and assumptions are being taken by the company when the financials are prepared. During the situations of COVID-19, the estimations or assumptions also need to be relooked. So there is also need to look at the certainty or uncertainty aspects of this estimation. And if there are situations where there is uncertainty of estimations or where the estimation which are taken for preparation of financial statements, it may change because of the situation right now, then the disclosure thereof need to be provided. At this time, I would like to state that there is always a lot of questions which I have received regarding the disclosure paragraph which can be put into financial statements. However, my view is that the disclosure for company A and company B will differ, because if you look at the impact of COVID-19 is different from industry to industry, from company to company. So the disclosure which are applicable for company A may not be applicable to company B. So in that situations, one need to decide the disclosure for its own company as such. Understanding from other financial is fine, but however, one need to reassess the disclosures for its own company and what is the impact on each financial statements. When we talk about the industries like hospitality and travel, tourism, they may be affected too much, severely impacted. However, other industries like refinery and may not be affected huge. So in that case, the disclosures need to be done by company to company for each own line items in financial statements. The most critical aspect which we discussed was the disclosures. As a stakeholders or investor in the company, the interest is to understand how the company is impacted. If I'm investing in a company X, there is an investor, I would like to understand what is the impact of the coronavirus on the company. Whether the company is going to sustain on long-term basis. If it is going to sustain on long-term basis, yes. However, is the impact severe impact? Is it a minor? Is it a major? So the disclosure is the most important part, critical aspects. What the management has done as assessment and analysis of this impact on financial statements, that need to be properly disclosed adequately in the financial statements, notes and accounts. In case of there is a loan covenant which is a breach, so the company has taken borrowing from the bank and that particular there is a condition attached to the borrowing. The company has not fulfilled the conditions, and because the conditions not fulfilled, the non-current borrowing may become current. Non-current why? Because the company may be required to make payment of term loan after more than 1 year. However, with a breach of conditions, because of the contractual arrangement between lender and the borrower, it becomes payable immediately. So, in principle, that non-current liability becomes a current liability. However, right now, the RBI has given guidance to a lot of banks. Also, government has a pinch into wherein they are given relaxations on the payment of the loans. So, if the relaxation has been provided by the government, RBI, or the lender, in that case, the non-current borrowing may not become a current. But that assessment, reassessment need to be done by the company and the auditor about this situation. India's 110 and AS 21, which talks about a consolidated financial statements. India's 110 states that the difference between the reporting period of the subsidiary, associate, joint venture subsidiary shall not be more than 3 months. If we talk about accounting standards, AS 21, it states that the difference in reporting period shall not be more than 6 months. Now, because of this COVID-19 situations, if any subsidiary company is in a country where it is worse affected and the company is not able to prepare financial statements, then the difference can be higher. In these situations, how to react, how the management can try to frame the financial statement so that the India's compliance can be done. It is again a challenge which the management need to do. Internal financial reporting. SEBI has issued a recently circular wherein the preparation of interim financial report, the deadline has been extended. There's always a understanding about that in interim financial reporting, which information I have to provide as a disclosure, because the first disclosure which come into interim financial reporting. If we look at the interim financial reporting standard under India's, it is India's 34, under AS it is AS 25. Both standards states that the disclosure requirements of interim financial reporting, recognition measurements, they are not different. Explanation of significant events or transactions that affect the stakeholders need to be provided even during interim financial reporting. So if the management is preparing the interim reporting for the quarter ended 31st March 2020, at that time also one need to provide the disclosures and explain the situations of coronavirus and its impact on financial statements. Can you note that the recognition and measurements which are being provided under for annual report, they don't change because of the internal reporting. That's why one need to look at all the accounting standards, all the principles to see the impact during preparation of interim financial reporting. Events occurring after reporting date. Ind AS 10, AS 4. There are two main important dates. One is the reporting date, and second is the date on which financial statements are authorized to issue. Between these two dates, any event which happens, it may be adjusting event or it may be non adjusting events. Adjusting events is the events where the conditions are existing as on reporting date, which are confirmed subsequent to that between these two dates. When we say adjusting event means my financials need to be impacted by the event which happens during these two periods. Where the condition is not existing as on the reporting date and the event happens subsequently, some conditions become subsequently. In that case, if it is very material, then it need to be disclosed. Let's take a case where the company is having financials year ended 31st December 2019. In that case, the coronavirus condition may not be existing as on the 31st December 2019 reporting date. And subsequently, there's a change. So the subsequent events are just providing the additional conditions or conditions which are not existing as on reporting date. So for the company having a 31st December year end date, it may not be adjusting events. However, for the companies which are having a 31st March 2019 year end date, the conditions of coronavirus was existing as on the reporting date. So anything which happens subsequently, that also need to be impacted or adjusted when you prepare the financials for the year ended 30th March 2020. Now, basically, this is the financial statements balance sheet, wherein the objective is to look at the overall financial statements to identify which are the likely possible impact areas. So what I have done is that based on the nature and items of the financial statements, I have divided and classified into the high, low, and medium impact. However, kindly note that this is only a understanding level. It may change from the company to company level. It may not be true for all the companies. It may be true for certain class of companies. The objective of putting the impact is based on the standards and Ind-AS and based on the provisions which are applicable in particular Ind-AS or standards. So when you look at the balance sheet level, the highest level of impact when you look at is on the financial instruments. Second very important thing is basically on the impairment testing. Impairment testing of property plant equipments, intangible assets, goodwill impairment testing, and also there are other financial assets where there may be impact. So let us look at and try to understand which are the main areas which may be affected, which may be impacted due to this coronavirus. First, let us look at about mainly property plant equipment. So tangible and intangible in together we are going to discuss on. One is India 16 AS 10 property plant equipment. After AS 10 revision couple of years back, AS 10 is completely in line with India 16. There's investment property India 14 and also intangible assets as per India 38 AS 26. Let us look and understand how these standards have the provisions with respect to these situations. If we talk about the property plant equipment in India 16 AS 10, under PPE, there is a need to reassess the useful life of every asset every year. So on periodical basis, on yearly basis, the assessment of useful life is inherent part and parcel of the standard. However, I will say that because of this coronavirus situation, it may be required by the company to reassess it minutely and go through the particular locations or the particular assets where it may be impacted high. There is one question which I received is about the assets which are remain idle. Why idle? Because right now the business are under lockdown situations and the machineries and everything are not being used by the company. So they are in idle situations. So whether I need to continue to charge depreciation? The answer is yes. Depreciation shall be provided even if the asset remains idle. However, you may change and re-estimate the useful life based on the impact on the useful life of the assets. Third question which can be coming is about there may be possible where the company has installed the plant and machinery in the month of March, tested, which are ready for use. However, because of lockdown, the company cannot use the machinery which have been tested and ready for use. Whether the company shall charge depreciation on the same? Answer is yes. As per Ind AS 16 and AS 10, depreciation shall commence when the asset is available for use. So when the machine has been installed, it has been tested, it's ready. Now, not using because of the emergency situations will not make the depreciation not to start. You need to provide the depreciation even for that machineries. And last is that residual value. As we discussed about the useful life, the residual value also need to be reviewed in these situations. Borrowing cost. AS 16 and Ind AS 23 talks about the capitalized borrowing cost. As per the standards, the borrowing cost shall be capitalized for the qualifying asset. Qualifying asset is defined as an asset that takes substantial period of time to get ready for its intended use. Now, in the case where the borrowing cost has been capitalized by the company, and there is a situation where from 18th March or 20th March, there is a lockdown wherein the company is not able to do the activities that are required to prepare the qualifying asset for its intended use. So in that case, the management need to look at the suspension of the capitalized borrowing cost. And if the suspension happens, the borrowing cost for during that period need to be expensed off and cannot be capitalized. So the suspension of the borrowing cost provisions need to be assessed by the company during this situation. Intangible assets. As we discussed during the period of property plant equipment, same way the useful life of intangible asset also need to be reassessed. And then if there is estimation change, it need to be changed. Under Ind AS 38, the useful intangible asset having indefinite useful life or which is not being amortized, it needs to be tested for impairment annually. So that impairment testing also be required in case intangible assets are not available for use or having indefinite useful life. There is also another standard on accounting for government grant or assistance. During these situations where the industry is in panic, it has been severely impacted. In a lot of ways, the government has and trying to provide a financial assistance. So the company also need to assess about the any receipts of assistance which is received from government, that how much and how to account for these assistance. So there is a concept of revenue grant where the grant need to be amortized over a period of getting the benefit. So one need to again look at the accounting under Ind AS 20 and AS 12 in case of receipt of government assistance in this situation. Now let us look at the right of use assets. Ind AS 116. The new standard of leases Ind AS 116, which is effective from 1st April 2019. As per the Ind AS 116, the company is required, where it is a lessee, they need to require to look at the lease arrangement. And for the lessee in operating lease, they need to create right of use assets and the lease obligation. Now, for the purpose of determination of right of use assets and lease obligations, there are various things which are being considered. First is the incremental borrowing rate. So what is the impact on the leases incremental borrowing rate in these COVID situations? that need to be assessed. Second very important thing is that right now the industry is under lockdown situations, and in the lockdown situations the lease rentals are being increased, and possibly there will be a renegotiations or negotiations happening with the leasehold, wherein there may be rent-free period or there may be concessions provided by the landlord. So in that case, there may be need to look at the modifications of the lease contract, and the accounting for lease modifications, which is provided under Ind AS 116, need to be assessed by the management. In case of variable lease payments, where the lease payments are based on the change in the revenue. So for variable lease payment, again, there may be a huge impact on the financial statements, where the revenue is severely impacted and affected. One more thing is that as we are also going to discuss under Ind AS 37, that one need to look at whether any contract has become onerous. The onerous contract is a contract where the benefit is going to be lesser than the cost. So unavoidable cost of getting the benefits is going to be higher than the benefit which can come. And if that is situations, the contract may become onerous contract, and the provisions and the accounting we also need to be looked at from Ind AS 37. Now we are coming back to the one very important thing is on goodwill. Under Ind AS, it said that in case of a goodwill, annual impairment testing is compulsory. Why? Because goodwill is not amortized. When the goodwill is not amortized, it is very important for the management and the stakeholders to understand whether there is a reduction in the value of the goodwill, and the reduction in value of goodwills and the impact in P&L account can only be known and understood if the impairment testing is done on the goodwill. So here in this situation, I think the goodwill impairment testing is going to be one of the most important aspects for management. As a business are in a standstill situations, and there are branches, there will be subsidiaries, associates, and the joint ventures across the globe. More than 150 countries in the world are impacted. The companies, factories, branches, locations are under lockdown situations, and supply chain issues are there, where the few industries are worst affected. In that case, if the company has a goodwill which arises on acquisition or on consolidations, whether that goodwill has been impacted. So the impairment testing is to be done. Again, along with the goodwill, we can also talk about the impairment testing of the non-financial assets. Ind AS 36 and AS 28 talks about impairment testing for a non-financial asset. As per Ind AS 36 and AS 28, where there are impairment indicators, it can be internal indicators or it can be external indicators. Where there are indicators of impairment, in that case, impairment testing is must. As far as the situation is concerned of coronavirus, the COVID-19 also falls part of the indicator based on the company's business and operations. So where the company's business and operations have been impacted due to COVID-19 situations, it provides indication for the company, and in that case where the indicators are there, the impairment testing is must. So when the impairment testing is required to be done, one need to look at the few very important things, all assumptions. Assumptions are with respect to the projections for the future business. One may have the various situations possible where this lockdown may go for next 3 months. It may be there for 6 months. It may be there for 1 year. What is probability of this lockdown going to be there, and how it is going to impact the business of the company? The financial projection which has been prepared a couple of years back or a year back, it may not be hold true in these situations. The financial projection which is done earlier, it need to be reassessed in the current situations. It need to be again rethink with respect to the situation happening right now, and then the financial projections need to be reassessed. In the financial projections, the assumptions like the discount rate to be used for discounting, it also need to be tested and changed with respect to COVID-19 impact. And one of the most important thing which I'm going to talk about you throughout this presentation is that the disclosure is the one of the most important key for the fulfilling the obligations in coronavirus. You need to understand and identify the most important disclosure which you are required so that the stakeholders can understand the impact on the financials, they can understand impact on the business, they can understand impact how it's going to impact their financials today and tomorrow. So same way, when the impact testing is done, the assumptions is done, how it's going to be changed, the assessment of that need to also be provided and disclosed adequately in the financial statements. Now let us look at one of the most important thing which has been, if you look at the balance sheet, in balance sheet, the majority part which constitute in the balance sheet is part of the financial instruments. Financial instrument mainly contains financial asset and financial liability. Under Ind AS 109 talks about the measurement and classifications, impairment testing of financial instruments. Ind AS 32 talks about the equity liability classifications, and the classification of financial liability for measurement and impairment testing is governed under 109. If you look at in balance sheet, the majority items are under financial instrument part. So one need to look at the assessments and impairment testing of financial assets, financial liability by way of the 109 implications. Under Ind AS 109, it provides that the financial assets need to be tested for impairment by way of using the expected credit loss model. The expected credit loss model talks about the forward-looking statement and present situation both. It also says that there are three different buckets in which the financial assets have been classified: bucket 1, 2, and 3. And the impairment of financial assets has two approaches. One is the simplified approach, and second is a lifetime ECL method. Lifetime ECL approach has been there for all financial assets, and only in certain cases the simplified ECL method, sorry, 12 months ECL has been given for all financial asset impairment, and lifetime ECL, which is called simplified ECL method, has been given for a specific class of financial assets like trade receivable. So in case of trade receivable, there is no need to look at the bucket wise level 1, level 2, level 3. There is no need to look at the 12 months and then look at the second level and then level 3rd. You can always apply simplified method of ECL way of impairment testing on the financial assets. So when you do expected credit loss model for impairment testing of financial assets, to arrive at the ECL way, there are three main important characteristics in ECL. One is probability of default, PD. Second is LGD, loss given default, and third is ED, exposure of default. First, probability of default. What is the probability that the default shall happen? During these coronavirus situations, the probability of default is going to increase manifold. So one need to assess if you given the loan to XYZ company, then possibility of default is higher in these situations. So then there is a possibility that the credit may be impaired, and which may have impact on your financial statements. Loss given default. If the default happens, then the loss here can be higher. For understanding and calculating loss given default, one is going to take care about the valuation of the collateral securities. In these situations, the valuation of the security has decreased tremendously. When you look at the Sensex, which was very high on top 3 months back, now it is at the very low period. So the collateral securities have a lesser valuations compared to earlier valuations. So the loss given default can be a very high here. Third part is a exposure of default, ED. As during these situations, the liquidity is going to be in a tremendous pressure, the companies are going to utilize their limits more. The banks which has sanctioned a limit and the company may not have utilized earlier, now the companies are expected to utilize more. So the limits are going to be utilized more. If the default happen, the exposure is high. There's a tremendous increase in the exposure also when the default happens. The chances of default, probability of default has increased, the loss given default has increased, and the exposure of default has increased. So the ECL model, one again need to reassess. It is also called the existing situation. Also, it is a forward-looking statement where one also has to look at what will happen if the default has happened. As I discussed, that trade receivable has been exempted from the 12 months to the stage-wise approach, and one can have a simplified method of determining impairment loss for trade receivables. However, I again believe that there will be a huge impact on the supply chain issues. Because of supply chain issues, what will happen that the impact on the trade receivables, the amount which can be realized from the receivables, the credit period is going to be very wide, and also the default which can happen from the trade receivables except returns may be higher. So one may have to reassess all the workings of ECL impairment testing on the financial asset, including trade receivables and loans. Measurement of investment and other financial assets at fair value. If you look at the overall way, when I look at the balance sheets and the balance sheet, the major impact area, if you identify that, they are the impact area where the fair value is higher, where the inventory need to be measured at the net realizable value, where there is impairment testing is required, or where the financial assets need to be measured at fair value, where it is near to the valuation at the current situations, there the impact is higher. So investment and other financial assets which are measured at fair value, the change in fair value need to be going to either the profit loss account or the other comprehensive income based on classification and measurement of these financial assets. And I can foresee that in that situations possible that the impact on profit and loss account or OCI may be higher compared to the normal other situations. Different scenario when you look at the assessment of impairment testing, and when you look at the ECL and other way to understand the impact of COVID-19, one need to look at the 2 or 3 scenario to understand the impact, because it is not even possible for anybody to understand when the India will be back, when the world will be back, and then when they will be operating normally. So one need to look at the various different situations possible. If the lockdown happens for 1 month, if it happens for 6 months, if it happens for 1 year, what is the probability of the each which can happen, and if that happens, then what is the impact that can happen on these financial statements, and then impairment testing also need to be done accordingly. So financial instruments is one of the most critical aspects where one need to look at the impairment testing, look at the measurement, and the impact can be high. For that, assessment need to be done by the company. If the company has taken a loan from the bank and there may be modification in terms, there may be a rescheduling of the loan which happened. So whether rescheduling of the loan or the modification is extinguishment of existing loan and the new loan, or it is a continuation of the loan, that assessment need to be done, and accordingly the impact will be different under financial statements. Hedge accounting. If the company has taken the hedge, let's take a case where the company has taken and assessed the cash flow hedge for highly probable forecast transactions, where the company was certain that the transaction which is forecasted is highly probable and it's going to be there, hence cash flow hedge accounting was done by the company. In these situations of COVID-19, the highly probable forecast transaction, is it still highly probable or not? That assessment need to be done. If it is not highly probable and if the company has done cash flow hedge accounting and now that hedging is not effective, the testing of hedging effectiveness assessment also need to be done. And if it is ineffective, it will go to profit and loss account and not to other comprehensive income. Fair value of derivatives, as we discussed earlier, that the financial assets, derivative, and all asset liability which are measured at fair value, there will maybe a huge impact on the financials, because there is a complete change of fair value earlier than today. So the derivative also need to be measured fair value, and there will be impact on the financials because of the change in fair value of the derivatives. Now we are going to the point where basically it is a case of income taxes, deferred tax assets, deferred tax liability. It can be net. So deferred tax is being governed by Ind AS 12 or AS 22. Under AS 22 and under Ind AS 12, both talks about the current tax and deferred tax. Under AS 22, deferred tax is to be measured using a temporary difference approach and timing difference approach under AS and temporary difference approach under Ind AS. So again, I'm just clarifying that under Ind AS 12, it is a temporary difference approach. Under AS 22, it is a timing difference approach. So when you talk about timing difference approach under AS 22, it is called profit and loss account approach. When we talk about a temporary difference approach under Ind AS 12, it is called balance sheet approach. So where the deferred tax asset is recognized either under AS 22 or Ind AS 12, the deferred tax asset recognition need to be again verified and test whether the DTR are still recoverable in these situations, because the assumptions and forecast and projections which are done for recovery of DTA that will again go on changing. So recovery of DTA again need to be understood and verified by the management. In case of the companies which are having the global presence across the world, there will be a lot of subsidiaries which are in the regions where it is severely impacted. So again, the DTA recovery need to be assessed at every jurisdiction level, and then it need to be arrived at the balance sheet consolidation level. So at every jurisdiction level, the recovery of DTA need to be reassessed and assessed by the company, and then at the global level, it will be done for preparing consolidated financial statements. Under Ind AS 12, it says that there is a need to create a deferred tax on undistributed profit of subsidiary companies. Now, in these situations, one need to again look at whether the deferred tax is to be created, whether the subsidiary is going to distribute the undistributed profit or not. So that assessment and reassessment again need to be done in this situation. Other assets. So as we discussed overall basis on the impact on the media, impact on the property, plant equipment, right of use assets, other assets, goodwill, impairment testing, financial instruments. Other assets also need to be tested from the way of their impairment testing. It also need to look at the recoverability. I think most important is the recoverability of other assets, which includes the advances, balance with government authorities, other receivables. Are they still recoverable? Is there an impact on the amount to be recoverable is being reduced? So that need to be done and tested by the company. Inventory, as per AS2 and Ind AS 2, inventories are required to be measured at carrying amount or the net carrying amount or net realizable value, which is lower. So net realizable value takes care about the situation where the how much amount to be realized. In these situations, possibly the inventory may not be realized at the same amount which has been the carrying about the company. So the subsequent realization of inventory, if there's impact on the realizability of inventory, the inventory may be required to be lowered down by the value of the NRV. As per AS2 and Ind AS 2, the fixed overheads are required to be allocated based on normal capacity. Here in the COVID-19 situation where the lockdown is there, the possibility industry may not be operating at the normal capacity, and there may be some idle capacity happening in the company during this period. So the question may be that whether the company shall absorb and allocate the overheads based on normal capacity or based on the capacity after reducing the idle capacity. The answer has been clearly laid down by AS2 and AS2 that in these situations where it is a temporary situations, the idle capacity will not be taken in considerations. So overheads has to be allocated only on the base on the actual production. So then maybe the higher amount of the fixed overhead cost which can be required to be taken to profit and loss account as a part of the expenditure. One more thing which need to be assessed here is about the IFRS 5 or Ind AS 105, which is on the non-current asset held for sale and discontinuation operations. If the company has classified the non-current asset or a disposal group as a held for sale under Ind AS 105, it states that this need to be measured at lower of carrying amount and fair value cost to sales. So one need to again look at the measurement of fair value cost to sales in these situations. And there is also a requirement that the within 1 year of measurement period, the asset should be sold. However, in the situation where everything is locked down, there may be need to look at and assess the extension of the 1 year period which is required as per Ind AS 105. Other equity. I think the other equity we have highlight. My objective here is to look at it. Also includes the retained earning. It also includes the impact of the profit and loss account of the current period. Because when we talk about the impact of the balance sheet, the residual impact of balance sheet or second leg of balance sheet goes to profit and loss account or OCI. So everything will go to the other equity. So the other equity, retained earning, and the profit liability of the company may be impacted severely. I can foresee that there will be the impact on the profit and loss account and the OCI of the company during the year ended March 2020 and also in the first quarter of June 2020. One of the very important things which has been questions for a lot of industries during this period is a recognition of revenue in these situations. Case 9 says that revenue shall be recognized when the significant risk and reward is transferred. When we talk about Ind AS 115, which is effective from 1st April 2018, that states that it talks about the principle of control, and there are 5 steps principle defined by Ind AS 115. So when to recognize revenue, that will be questions for the year ended March 2020, because there is a possibility where the goods may have left the factory and they may be at the port, or the goods are ready, they are lying, finished goods are lying at the factory premises. Then what? So whether to recognize revenue or not in these situations, in that case again one need to look at the conditions which are specified, the principles which are laid down by AS 9 and Ind AS 115. So whether the control is transferred to the customer, if the control is transferred to the customer, and we can say that it has been transferred, so the revenue can be recognized by the company. However, if the finished goods are lying in the factory and the control is not transferred, then the revenue may not be recognized. So the recognition of revenue may be one of the most important things, because for a lot of companies, year end has been the most crucial where the sale has been happening. And last 10 days, 15 days of the year end were completely in the lockdown, where the lot of companies were hoping that the year will be extended. But as we are aware, the year is not extended. Year still ends on 31st March. And for the 31st March year end date, we all have to prepare our financial statements. So you need to look at the principles which are laid down under AS 19 and Ind AS 115, which talks about recognition of revenue in these situations. Apply the principles and then decide whether to recognize revenue, or if the revenue is not recognized, then recognition of my inventory. So again, it's one of the very important criteria, a very important challenging time for the auditors and management to arrive at the conclusion. If there are considerations which are variable in nature, then what is impact on the estimation of variable consideration that need to be assessed. There may be goods in transit. When I talk about the sales, also there is a need to talk about purchase. So in both ways, when the goods in transit, how to account for goods in transit in this situation, control is transfer, not transfer, that also need to be assessed for that. And the most important is the disclosure. Again, in revenue standard states that the nature, amount, timing of uncertainty of cash flow, if any, need to be disclosed. So disclosure which are there in each standard need to be assessed from the COVID-19 situations to look at, am I required to provide disclosure which is useful to the stakeholders to understand the impact on financials, understand the applicability and measurement of the particular standards to the company. Provisions, contingent liability, contingent assets. We briefly discussed about owner's contract when we talk about leases in this 116. So if there are contracts, whether there are contracts which becomes onerous, if there are contracts which becomes onerous, then the company need to reassess the accounting of creating liability for this kind of contracts. There may be a delay in fulfillment of some contracts, and there can be penalties. So whether the company is required to pay penalties, or there is extension of the clause which has been there, which provides a force majeure clause. What is the impact of the force majeure clause in the contract, or while doing accounting, that also need to be assessed. So the company need to look at the various contract, the liability and obligations of that contract on the company, and if any material impact need to be reassessed, and then the decision for creation, provision or liability need to be done. In case where the company has taken the insurance for the compensation on loss of profit, and if the company has already lodged the claim, then one need to look at the virtual certainty as per India's 37 for recognition of that. Whether the company has made the claim, the insurance company has accepted the claim, what is the probability of the amount to be received, this all need to be assessed before the amount of insurance claim receivable has been recognized in the financial statements. Employee benefits. AS 15 and India's 19, they both talks about the accounting for employee benefits like gratuity, prudent fund, leave encashments, where the benefits are defined benefit plans. In that case, the gratuity and others, there's need to do actual valuations. In actual valuations, a lot of assumptions are used. The assumption includes the assumptions on discounted, assumptions on the salary escalations. There are news and reports where a lot of companies across the world has declared that there won't be a salary increase, there won't be bonus during the next years. So there will be possible that the assumptions and escalations or rate which have been taken into consideration during last time, it need to be revised. So while providing the estimations and assumptions for arriving at the graduate liability, one may need to look at the all assumptions and reassess all estimations which are being considered for the purpose of the valuations of actuarial for defined benefit pension plans. Same way, share-based payment in Ind AS 102, which says that the fair value method is to be followed for the purpose of valuation of ESOP. Under accounting standards, there is guidance issued by ICAI which says the intrinsic value method or fair value method. So where the fair value method is being used for accounting for this ESOP or other share-based payment, then there will be impact again as we discussed on the assumption which are used in fair value, and also a resulting impact on the financials of the company. Ind AS 113, which talks about the fair value measurement, because we talk about a lot of cases where the fair value has been constantly being discussed, whether it's financial asset, whether it's inventory, whether it is 105 non-current asset for sale, or whether about all other standards, goodwill impairment testing. There is a need to look at the fair value and arriving at the amount to which is recoverable. Ind AS 113 talks about providing guidelines of measurement of fair value. There are three levels of hierarchy of the fair value. One is level 1, then level 2, level 3. Level 1 hierarchy talks about the quoted price. Level 2 and 3 is talking about the valuation techniques to be used for the purpose of measurement of fair value. So level 1 quoted, as it is a quoted price, it is estimated that a lot of change will happen because of the change in the fair value of that particular items, and it will have resulting change on the measurement. For level 2 and 3, where the valuation techniques are used, when you look at the assumptions, estimations, and principles which are used for the techniques, and that also need to be reassessed and changed as per the changing situation. With this, I'm coming to the last slide of these discussions on the impact of COVID-19 on financial statements. When I look at the overall, in various places I talk about the change. Various places I talk about the revision in the estimation. Various places I talk about the disclosure requirement. Various places I talk about the fair value impairment testing. So in general, there's an increased role on the company auditors. As a CA, as I always believe that there's a lot of increase in the method, increase in the way we are doing for so many years. There's a lot of change in laws and regulations since last 3 to 5 years, whether it's ICDS, whether it is recommend Indies, whether it's completion compliances, whether it's talking about the Indies 115, Indies 116, and now there's one more role, increased role for the company auditor, and that increased role is not due to the government. The increased role is because of the situation which has been happened in this world, coronavirus. So company need to look at the impact on each and every item financial statements. In my view, the questionnaire need to be framed for the purpose of understanding the impact on each items and business supply chain issues, and then there has to be a deliberation going on the items, and then one need to look at how to prepare financial statements. Huge impact, huge role of the auditors to look at what the management has done estimation change, are they right, correct, and whether they are adequate, whether the disclosures made by the management are correct or not, and then the audit report, whether the going concern is there or not, the qualifications required or not required, what is the process which is done by management for the purpose of preparation of financial statements. There is a huge change in the role of auditor, which is in addition to the actual auditing task. Auditing has been the most critical time right now, because we are certainly used to look into the financial statement, we look at the records and documents. Yes, there is a way where majority is done based on the technology, based on the software, based on the Excel file, based on system. However, there's a need to look at the documents, how to look at the records, how to look at the documents, how to do conclusion on the financial statements, how to do the testing of inventory in these methods. Rollback of the inventory is required, physical verification, and then to arrive at the conclusion. So a lot of things are there where the auditor has to look at the way they do audit is going to be changed completely. So increased role on the company and auditors. Areas of concern which I talked about earlier is one, financial instruments, impairment testing, revenue recognitions, fair value at various places, and disclosure is one of the most important thing what the stakeholders are looking from you. So in my view, I think please look at your financials, look at the business in which you are working, how it's going to impact. Also look at the ECL computations. It is a current situation plus forward-looking statements where all your estimations are going to be changed, and the disclosures which is really going to give the more clear picture to the stakeholders is what acceptable and what is expected from the stakeholders for the company. Now, with this, I open this particular presentations for question answers from participants. It will be my privilege to give reply to your questions. Obviously, it is again a session where we all can learn. Over to organizers.
Four questions currently. The first is, in case of inventory, as per ICAI, advisory fixed overhead should be allocated at normal capacity. Can you please confirm again and explain?
Yes, as per India's 2 and AS2, the fixed overheads are required to be allocated based on the normal capacity. During this period where the last 1 month is a situation where the company is not able to work properly and there may be idle capacity. However, the standard provides guidance that in that temporary situations or whether it's idle, it need to be ignored. So ICI has provided guidance, and also it is part of my account standards which states that you need to provide based on the actual productions, and other fixed overheads need to be expensed off.
Yes, Fenil bhai. The second question is, Chintan bhai, the second question is, lot of companies are contributing to efforts against COVID-19. Does the contributions which are made post 31st March to be booked in March 2020 financial statement as adjusting event and claim it as a CSR expenditure in financial year 20?
If you look at the adjusting non-adjusting event, the standard states that any event which happens between the reporting date and the date on when it is authorized to issue financial statements, that need to be adjusted if the condition was existing as a reporting date. When I talk about where the company has not contributed till 31st March 2020 or till the period of the closing of financial statements, then the condition was not existing as a reporting date. It is a contribution which is voluntary contribution. It's not a compulsory for the company to do contribution. Hence, in that case, it is called a non-adjusting event, and if it is material, it can be provided as a disclosure. Which is my next question.
Yes, next question is, let's say A Limited has investment in B Limited. B Limited suffered heavy losses in market price on stock exchange in last week of March. Therefore, value of A Limited's investment in B Limited witnessed a huge fall. However, before finalization, stock rose back to original levels. Should the fair valuation be done on 31st March to book losses in financial year 20 and then again book gains in financial year 21? That is what the question is, sir.
Yes, thank you. As per Ind AS 109, the financial assets required to be measured on initial measurement and at each reporting date. So as the reporting date is 31st March 2020, on that reporting date, it has to be measured. So one need to book a loss on March 2020, and subsequently, if there is a change wherein it has been regained this market share, then yes, it can be booked as a profit in the subsequent reporting results.
Next question is, we are not in a position to physically verify inventory, cash, etc. So any specific remark is required to be made in reports?
A very good question, actually. That is the situation for all of us. As it is lockdown, we are not able to move out and we are not able to verify physically inventory. So, however, in that case, there is a procedure of rollback. This is specified under auditing standards. Let's assume that on 3rd May 2020, the accounts are or the operations are back. Lockdown has been basically not there, and you are able to visit the inventory on 15th of May 2020. So you can calculate the inventory, verify the inventory on 15th May 2020. You can perform the rollback provisions from 15th May 2020 to 31st March, and then you can get confirmation and satisfactions of the inventory. However, the procedure which is specified for verification and getting confirmation on the inventory is required, and it should be done by the auditors.
So the next question is, what are all private limited company?
Bishop, your question, can you just please repeat again?
What are specific disclosure for small private limited company?
Yeah, I think it's always a question because for small SME companies, because when you talk about the Ind AS and AS in detail, it's always a case that ये सब मुझे applicable है नहीं, आप तो मरा कि कामनु नहीं. But for small company also the disclosure is required because SMEs are worst affected. In my view, SMEs are worst affected. The liquidity issues, the amount which is receivable from the company, are they receivable, not receivable. So the disclosures will be required either you are SME or a large company. Any disclosure which is useful with stakeholders, because for SME company they may have taken the loan from the bank. There may be other stakeholders which are concerned. So the disclosure required so that others can understand the position and impact on financial statements. There is not a fit disclosure, or there is not one disclosure fit for all cases. One has to identify disclosure for a particular companies, and then they do provide. Yes, over the period we can provide, we can come out with a set of disclosure which can be done, but at this time it is not available to have a set of disclosure. In my view, the disclosure for each company should be different, because the disclosure which is impacting each company, it is not to all companies same.
Next question is whether loss incurred by company on account of lockdown can be classified as exceptional item. If not, then whether effects of lockdown don't make financial statement non-comparable.
A very good question actually, because again, there may be a huge loss during this lockdown period. But when I look at the loss, because lockdown was happening only in the 28th March or 18th March 2020, the period which was covered was not a very long period. So in my personal view, it may not be qualified as exceptional loss. However, there is guidance which is available under Ind AS. It says that any item which is material for the users to show separately the impact, it should be shown separately. So if the management believes and the auditors satisfied confirms that this particular event and impact is severely affecting the financial statements, and it qualifies to the definitions of the material item which need to be shown separately, it can be shown separately, and one has to follow the account standard guidance which is provided here.
Sir, the next question is, in case of X Limited, which is construction company, has employees staying in factory and any amount paid to them is to be treated to P&L or to WIP project? WIP of the project.
See, construction company, so what I understand is that for that company, it is an inventory. And where the company is preparing the some or doing construction of some building which is to be held as inventory, one has to follow the standards of Ind AS 2 AS2 inventory, which talks about the capitalization of cost to inventory. So whether it's lockdown or not lockdown, I think the main part which you are clearly talking about is that the amount of salary which is paid to the employees, where that salary is not being used for construction of the particular inventory, but it has very fixed cost which has been incurred. In that case, in my view, it should be expense of, because that employees are not working at this time, they are not helping to build up the inventory which is required, hence that amount is to be expense of.
And the queristers ask whether, continuing to this question only, example rupees 100 fixed overhead, 100 number is normal capacity, last month ideal, so actual production is 90 only. Please suggest how to give the effect. I guess this question is of
right. So basically, there is fixed overheads unit, FOAR, fixed overheads per unit is being determined, and based on the FOAR which has been determined based on normal capacity, that FOR need to be calculated and multiplied with the actual production, actual number of units. So when your actual production is 90, then it will be the, if like 100 is amount of fixed overheads, 100 is normal capacity, 1 rupee is my FOAR. So 1 rupee will be multiplied with 90, and the 90 rupees will be eligible to be capitalized, and rest 10 amount will be expense of, as per your example which is given here.
The next question is, kindly share FAQ on how better disclosure for SME and other mid-sized company can be made.
I think it's a very good question, because I can foresee that a lot of SMEs are struggling to understand the disclosures. Obviously, I will keep this in mind. At this time, there is no FAQs being prepared by anybody. But yes, it is. I will definitely try to prepare this kind of FAQs or disclosures. Once it is ready, I will definitely submit and provide, share with all others MSME, so that all can follow the guidelines for this.
It's a last question. And in case of receivable, whether confirmation will suffice or auditors is expected to go beyond that?
The question is very critical in the today's thing, where the getting confirmation whether positive or negative confirmation is difficult. See, confirmation is one of the method to get confirmation on the valuation aspects and realize the aspect of the receivables. So confirmation can be relied upon. However, if there are some evidences or there are some situations which gives you a negative impressions, you may have to go beyond the confirmation. So yes, in general, confirmation is the process which has been defined, the part of auditors. You can follow that confirmation process, you can rely on the confirmations, but where you have some basis to doubt on the confirmations, you can go beyond that and provide your duties.
So it's an end of question and answers. Chintan bhai, on behalf of the branch of WIRC of ICAI, we all are thankful to you that on this birthday day, you came here and you deliberated. Also, you have given details of the subject and all the questions has been answered by you. So once again, from bottom of my heart, I am thankful. Thank you, viewers, that you participated. Though Modi ji came at 10, and that's why we have to just postpone for half an hour, and you all help us in that also. So we will be continuing unlocking ourselves from this platform only, and I request all to join all other webinars. We are going to have one more webinar at 1:30 to 2:30, where expert from financial market will going to come and address us, and the questions are on how we can save our wealth and what to do in this current scenario. So I request all to join at that time. In the evening, we are also having a last day of our GST webinar series, and the topic is valuation. I request all to post your questions there also. We try to give a solution to your queries. If time doesn't permit, then we are going to collate all those queries, and we are making a solution. We will be making one note and a solution of those questions, and will circulate amongst the members. So once again, thank you very much, friends. Chintan bhai, thanks.
Thank you so much, all of you. My pleasure.